Hello and welcome to today's NinjaTrader ecosystem event with Mark of Trade by the Numbers. My name is Tiffany and I am a platform representative of NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the following number or email. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader demo with live time market data. Our platform is always free for advanced charting, strategy, backtesting, and trade simulation. You can get your free demo account by following the link on the screen. Before I turn the mic over to Mark, it is important to understand that these features, foreign currency and option trading, contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. With past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation, no recommendation, but simply educational in nature. Thank you again for joining us today. And without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Mark of Trade by the Numbers.
Thank you, Tiffany. Before we get started, I want to say thank you to NinjaTrader for hosting us. And also, before we get started, I want to take a quick second to get to know the audience. So I'm just curious, how long has everyone been trading? All right, Ray, it looks like you've been at it for quite some time. Chris, looks like you're a bit of a newbie. Well, this is what I expected. I thought we would have people from all across the spectrum. We have people who are just getting started with their journey, people who are in the middle of their journey, and then we have a handful of you who've been at it longer than I have. So before we get into the meat of this, I just want to personally welcome you and say thank you for attending the Trade by the Numbers webinar. I have a lot of great material to cover today. Before we do, I want to take a second. I want to introduce our team. So you have Alex, Taylor, and myself. Alex, he is our wizard behind the curtain. His knowledge of programming and databases is second to none. If it wasn't for Alex, I would have never been able to finish this 3-year-long project. Taylor, he's our project manager. He keeps Alex and I on the right track and forces us to focus on the details. He's a stud when it comes to project management and simplifying complex subjects, specifically around trading. And finally, yours truly, Mark Sedlak. I'm the founder of Trade by the Numbers. I've made every mistake in the book, and I've taken the complex world of trading and adapted it to my way of thinking. In doing so, I've become an expert in one area of focus. We're going to cover that today. Think about this. Just like Apple and the iPhone, becoming great at one thing, let's transform my trading. I believe success is dictated by focus. There are some phone companies who manufacture over 40 different types of phones. Apple, they only have one, and they blow away the competition. The point is, intent focus on one thing means saying no to many great ideas, but it enables you to build a foundation that lasts a lifetime. In fact, did you know, before Steve Jobs came back to Apple, they had over 400 products. They were on the verge of bankruptcy. After Steve Jobs came back, he cut that down to 10. That was the turning point for Apple, moving from near bankrupt to putting them on a path to ultimately becoming worth more than $2 trillion. Okay, I know Tiffany's already covered this, but we need to cover the same thing. So before we move on, we got to cover the painfully obvious but important disclosure. So today is for educational purposes only. It's not meant to be taken as financial recommendations or advice. It's vitally important to understand risk dynamics of what you're trading, particularly around leverage. You must know how much your exposure is when you're in a trade. If you don't understand this, I urge you to stop trading. Do some research, or if you want, reach out to me or reach out to NinjaTrader. I'm sure either one of us are happy to answer questions. All right, let's quickly go over what we're going to cover. So we're going to talk about why most traders will continue to fail. We're going to talk about what moves markets in the most simplistic form, how I use market mechanics to define price action, how I read price action using market structure, and then finally, we're going to talk about random outcomes versus probabilistic outcomes. All right, so today, I'm going to challenge the way you think about trading. You see, I believe most traders skip one of the most important steps when they first begin their journey. It's a step that's skipped by most, including myself. It's a step that's easy to skip because of all the information that's available to us today. We're all searching for the secret formula for success. We believe if we Google the right phrase, we will find that holy grail that takes us from novice to success overnight. In fact, we expect results now. And it's easy to skip steps in the journey, especially steps that seem insignificant. You want to skip right to the fun part, because let's be honest, the fun part is much more rewarding. But unfortunately, that's not how success is built. Success is a process. It's not a destination. You don't just arrive at it. Have you ever thought about why this journey is so challenging? Well, there's a vicious cycle and it plagues traders and keeps them stuck. In fact, I was stuck in this cycle for 3 years. It took me hiring a trading psychologist to realize what was holding me back. When I first began trading many years ago, I scoured the internet looking for profitable trading strategies. Here's what I found. Does this look familiar? Breakout strategies, market profile strategies, day trading strategies, swing trading strategies, momentum strategies, trend strategies, counter trend strategies, mean reversion strategies. Honestly, it's exhausting. Question is, how do you pick one? So here's what happens. You pick one, you learn it, lose some money, and then you move on and you learn the next one. Look, I struggled for 3 years because I was focused on learning other people's systems. This kept me from building the foundation that I needed to really understand the market and how price moves. This is what I call market structure. What I learned was by skipping this step, I was building a trading business without a foundation. That means I was destined to fail. And that's exactly what I did. Looking back on it, I don't believe that the systems were bad. It was that I was trying to skip right to the fun part. And that caused me to miss the most important piece, which is a deeper understanding of how markets work. So let's talk about that. Markets are nothing more than an auction. Let's consider an auto auction. As prices auction higher, you have fewer and fewer participants willing to pay the higher price until you're left with one buyer, the buyer who wins the auction. Now, the market's a little bit different, but the point remains the same. As prices rise, there are fewer participants willing to pay the higher price. Eventually, there are no longer enough participants pushing price higher, so it must come down. This creates the market structure patterns. These are the foundation of all markets. Let's discuss the different directions that the market can move. The good news is there's only 3 of them. It can go up in an uptrend. It can go sideways when it's consolidating, and it can go down in a downtrend. Look, I know this is simple, but there's a key point here. The key idea is if you want to build a sustainable edge in the market, you must have an objective way to determine trend. Now, I've got a question for you. How many of you in here have objective rules to define trend? Seriously, engage with me. I'm curious. Hit me with a Y for a yes or N for a no. Okay, great. I mean, it looks like a lot of you do have an objective way to define trend. A handful of you maybe aren't sure. I'm kind of getting that feeling. Look, totally get it. Having objective rules, that's the backbone to developing an edge. Keep in mind, that we don't even need to be right 50% of the time to have an edge in the market. But it's so critical that you have the if-then process when trading the markets. So let's take a look at an uptrend and see what it looks like. Let me get my nifty little laser pointer out. Everybody see that okay? All right. In this example, the market begins in a downtrend, and that's evidenced by points 1, 2, and 3. We've got the lower high and the lower low. The dotted line, that's the structure from the downtrend that I would want to see broken prior to confirming a potential uptrend. The uptrend, it begins with an initial thrust, and then it puts in a higher low and a higher high, breaking the downtrend structure and confirming the uptrend. From here, I would want to see price come back to the structure and put in another higher low and a higher high. Look, just this one pattern can help you improve your trading. It seems simple, but take it serious. Now let's go take a look at an actual chart, and I want to introduce a concept to you. So we have buy zones and sell zones. Basic stuff. My sell zones are going to be red. My buy zones are going to be green. Just like the picture that I drew, here's my structure from the prior downtrend. And again, I would want to see the uptrend start with that initial thrust and then start building in our higher lows and our higher highs to confirm an uptrend. And you can see what happens here. It starts building that structure, breaks through, confirms an uptrend, and then you have plenty of opportunity on the way up to catch trades. You don't have to catch trades down here. Is it great to do that? Yeah, sure, but you're going to take a lot of hits trying to catch the bottom of a move. Okay, now let's flip this over. And let's just look at the downtrend. It's just the opposite. So start with an uptrend. You can see points 2 and 3. You've got your higher low and your higher high. We have a dotted line here that shows us where the prior structure is from the uptrend. And just like the uptrend, the downtrend is going to start with an initial thrust. And then I want to see the lower high and lower low get put in and break through that prior downtrend structure. That would confirm my downtrend. I then want to see price move back into that structure and put in a lower high and a lower low. Again, let's go take a look at an actual chart. So same thing applies, sell zone red, buy zone green. Here is my prior structure for the uptrend. You can see price comes down, breaks through it, and at the same time, we put in that lower high, lower low. We come back into the zone, we bounce around a little bit, and then finally, price decides to move lower, stair-stepping its way down, creating multiple market structure zones. The important part here is, how do you determine those structure points and where to use them? For me, I needed this to be 100% objective, using rules that a computer could follow. This allowed me to remove my own bias and to collect raw system performance and measure if the system has an edge or not. So let's quickly review a sideways market. I know this is basic stuff here, guys, so bear with me. But how many of you have tried to trade this type of market when there's no trend and you're trading a trend trading system? The key here is, look, we've all been here, okay? Here's the key. Understand how your system behaves in all market environments. It allows you to manage your own expectations. Look, if you're a trend trader, wouldn't you expect to take some losses here? I mean, I know I do. So it wouldn't make sense for you to have the same expectations in a market like this than if we had a market that was stair-stepping upwards. Okay. How many of you want to flip over and see what this cool tool that I'm handing out to y'all today looks like? All right, let me switch over. Okay, you guys should see a chart here. All right, so I have a random chart. I literally started at the top of the alphabet. And we are in 2011. You can see a middle mouse button click. If you guys didn't know that feature on your charts, it's pretty cool. You can middle mouse button click on bars and get some information on them. Okay, so here's what we're looking at. We can see what price had been going down. Again, just like the pictures, except here we don't have a downtrend. We just had a retracement. What I'm looking for is just these structure points, the higher lows and the higher highs. The green zones that you see here, I didn't draw those in. Those are automatically drawn in with the buy sell zone indicator that I'm going to send over to those who attended today. And you can see what happens. Price it confirms, they confirm aggressively. We confirm, move back into a zone, and we start stair-stepping higher. Again, confirming another zone. This is one of my favorite patterns when we have multiple zones that confirm right next to each other, because what that tells me is I have that nice stair-stepping pattern as the market is going higher. And you can see what happens. It comes in, we get some nice movement out of this zone. It does go sideways for a while, but eventually decides it wants to head higher. We continue putting in zones. Here's an example, the consolidation period that we talked about. Look, again, you're not going to win them all, okay? And we don't have to, right? So this one just doesn't work out. We continue, come back into this area. Price then builds new structure, starts higher. We have another zone. And then we continue pushing higher. Now here, again, this is the consolidation period. This is what I'm talking about. This is the area that you just have to expect you're going to take some lumps. We push lower, again, confirming new structure and pushing higher. And then this is where you get to have a lot of fun, right? The market does this all the time. Now, you're probably wondering what time frame this is. This is a daily chart. I turn this into minutes. It's 1440. It's just 24 hours times 60. So that's the time frame we're looking at. But anyway, I can just flip through this chart here. You can see this we kind of got saved by not having any structure, because otherwise, if we had structure zones here, I would have expected to take some losses. And then we start building new structure again, and you start getting, here's that same pattern I was talking about, right? It just happens over and over. Now, this is no fun, right? But that happens in stocks. So anyway, I could go on and I could show you chart after chart after chart. And I think we would all agree that market structure is the foundation of markets. For me, I noticed these patterns just when I would visually observe charts. And I noticed that zone after zone after zone, price would get its biggest moves after auctioning higher and then retracing back to one of these areas. These moves were exactly what I was after. I wanted to trade where I could risk the least and make the most. And I knew of no other strategy offered to retail traders that had this level of potential. In addition, as we've discussed, market structure is fundamental, and that's not going to change. Professional traders have been using this for decades to develop an edge in the markets. And after many years of searching, I finally had my answer to how I would develop an edge in trading. There was one more problem to solve. How would I test this to determine if, in fact, trading market structure has a sustainable edge over time and in those different market environments? To do this, I had to develop a set of rules. And when I say rules, a computer had to be able to take what my eyes see and draw it on a chart, just like you're seeing here. And then it allows me to run tests over 20 years of data. How awesome is that? All right, let's go take a look at what some of this data looks like. I got to switch back over here. Okay, so I'm going to hit you with some numbers on some actual back tests that were performed on these zones. So here's the testing period. So 18 years, it did from 2003 as far back as I could go to 2021. Here are the rules. Very simple. Longs only. I personally don't like to short stocks. Volatility-based stops using the ATR. No target, trail stop only. I'm going to trade most recent market structure zone only. Max losses, 3 per zone. So that takes care of those sideways consolidation moves. I don't want to get beaten up too bad, so I'm going to cap out my losses at 3. Here's what the numbers look like. On the daily chart, this is the S&P 500, 11,000 trades. Average winner, this is risking $100 per trade, okay? Average winner, $370. Average loss, $92. Average reward to risk, 4 to 1. That means on average, if I'm going to risk $1, the testing showed that this system would make 4. Average time in trade, 66 days. Okay, so it's swing trading. Now let's go take a look at the weekly. As expected, there's fewer trades, 3,400 trades. Average winner goes up quite a bit, $419. Average loss, close to the same. It goes down a little, but look at this. Average reward to risk, 4.78. Now, here's the kicker. My average time in trade, 486 days. Hello, tax advantage, right? Look, that's long-term capital gains. So I have to be patient, but I do get some benefit. All right, recall, at the beginning of the training, I talked about changing the way you think about trading, right? I want you to imagine something. Imagine taking the knowledge that you possess today, taking that knowledge and stacking it on top of something as foundational as market structure. With market structure as your foundation, you can begin using that knowledge. Maybe it's you like to trade stochastic and look at stochastic divergence. Okay, wait for price to move into a buy zone, then look for stochastic divergence. Maybe you want to look at stochastic divergence and market structure across different time frames, like a weekly and a daily. All right, add that on top. You get the idea. You can leverage market structure as a base and stack any trading feature on top. With 10,000 stocks out there, the possibilities are endless. This is what happens when you focus on one pattern. It's like Apple with the iPhone. They have one phone, but they continue to stack features on top to enhance the experience. And when it comes to system building, I believe this is the holy grail, a solid foundation along with additional features stacked on top. Now, I know I mentioned the stochastic divergence, so let's just take a quick look at what that might look like. So for those who aren't familiar with stochastic divergence, I'm going to give you a quick rundown right now. So we have price coming into a zone. We have a low. Price retraces. It makes a lower low right here. And at the same time, stochastic has a low, retraces, and makes a higher low. See, stochastic is diverging from price. It's a classic sign that there may not been as much momentum in this move as there was in this one, okay? And what we see happen here is an 18% move straight up. Now look, obviously I cherry picked a chart to show you guys a chart that worked out, but I don't have to do that, guys. These patterns are endless. The possibilities truly are endless inside of these zones. Now I want to show you guys something real quick, so show you what others have done inside their journey once they moved out of the cycle. Lax, he took the zones and he developed a day trading system for futures. It's been consistently profitable for several years now. Kyle, he's a data scientist. He developed an investing strategy, investing in stocks on a daily time frame using these zones. Elaine, she took the zones and trades option strategies out of them. My only point is you can do really whatever you want. So we discussed the cycle that most traders get trapped in when they begin their journey, right? We discussed market structure being the foundation most traders skip past. We discussed using market structure as the foundation and stacking other features on top to build a sustainable edge. Now, I'm going to show you all how you can get started here. My goal is to make this super easy for everyone. We want to build a community of traders who use market structure as their foundation. You see, retail traders have always been at a disadvantage when it comes to the markets. However, I believe with market structure as our foundation, we can help each other stack features on top to build a sustainable edge. And just for attending today's webinar, we're going to give you the tool that I showed you. I'm going to give that to you, no catch. It's yours, free. And with that, you're going to receive a set of videos. It's going to walk you through. I think there's like 7 videos. It's going to walk you through the features of the indicator. You're going to know how to use it. Again, it's free. We also have, for those interested, we have an advanced version. And this advanced version, it's pretty slick. It allows you to look across multiple time frames, and it allows you to analyze trend on any time frame. And then in addition, if you want to enhance your knowledge of market structure, you can purchase our course. Inside the course, you're going to learn how to analyze trend, how to use market structure across multiple time frames, which is what that advanced indicator does. But it's a method that I promise you haven't seen before. In addition, I'm going to offer up some ideas you can implement immediately, such as the stochastic divergence, stochastic cross the extreme, using volatility to assess your risk, and other ideas. I'm going to show you how you can properly test a system. And as a bonus, I'll show you how one basic filter increases the average profit per trade during the testing period. You will also learn how to get your mind right to set you up for success. This, as I mentioned, was one of my biggest challenges. In fact, like I told you, I hired a professional trading psychologist to help me with this. And inside this course, I'm going to give you the lessons he taught me. I paid him $1,500. I'm charging you $147. Small fraction of what I paid. And then finally, I'm going to include my most popular trading psychology training. I did this for a group of students several years ago. One of my students said he watches it every week to get him prepared for the trading week ahead. It's powerful stuff. I'm offering all of this for $147. If you're ready to learn a new technique you can apply across any market, any time frame, a technique that can complement your current knowledge and your current system, this is for you. I'm not here to hard sell you. Look, I'm not a marketer. I'm a trader. I've set these prices to make it a no-brainer for everyone in this training to get started today. And with that, I want to thank you all for your time today. And I truly hope that you feel like you got some value from this and that you're able to put the free market structure indicator to good use. Taylor is he's going to drop a link in the chat. And there's one link. You can go in there and you can pick what fits, you can pick whichever direction you want to head, whether you just want the free version, whether you want to get started with the advanced and buy the course, totally up to you. One more thing, you probably noticed, community. I have Discord and Zoom on here. So I'm in the process of building this out. It's not ready yet, but you'll be invited once it's up and running, no matter what level you come in at. Okay, again, this is about building that community of traders. Kenneth, the price is for the training, it's a one-time charge. For the trend and overlap indicator, it's $37 a month. So, question, is the advanced indicator included with the training course? So the advanced indicator is not, but what runs the advanced indicator is in the course. So you could take the free version and you can get to the same point. Now it won't be as clean, okay, but you can get there with it. It works on any chart that has price bars. I don't day trade, Carlos. I take longer term trades. Okay, I personally choose to not sit in front of my machine and be tied to it. I did that for a long time. I used to run a trading room for quite some time, where I literally was live sharing my charts for 3 hours every day. I just don't like day trading, man. But you can use this. Again, I mentioned a guy who he uses this market structure to day trade futures. I can't answer how the performance is on day trading. Again, I don't do it. The course is about 5 hours of content. So Gene, I actually have an indicator that measures divergence. It's fairly new. It's not ready for release yet. AR, I'm sorry, I've got a lot of questions coming through. So can you please ask your question again? I must have missed it. Nathan, one time, I'm trying to find your question, man. Yeah, I mean, I think you could look at weekly, using daily charts or weekly charts, you can test some strategies that I would think would work on weekly option trading. In fact, Elaine, someone I mentioned, does a lot of that with these zones. The objective criteria that I mentioned, man, we don't have time for that. I don't have a problem setting up another time to walk through some of that, but I do go through it in detail. I don't detail out the specific rules in the course because there's just too much there, and frankly, there's no way a human would be able to do that themselves. It takes a machine. And free upgrades. So yeah, if I upgrade the trend or the overlap indicator, then yeah, you would get free upgrades. Absolutely. Or if I add stuff to the course, which is a strong possibility, it would just slip into your membership section. You would have those upgrades. And one other thing, Elaine is someone who actually is part of the community. So if you're interested in those options, she's in there and you'll be able to pick her brain. She's been at this for a long time. She's actually been with me for since 2016. Oh, there you go, AR. Check out what Taylor just said. If I'm not responding to your question, please know there's questions that scroll through and I can't always catch them all. So that's my way of saying don't hesitate to ask him again. Yeah, and you guys feel free to email me personally. I'm always accessible. And again, we have a YouTube channel. I haven't been posting for a long time because again, I'm not a marketer, guys. Look, I am deeply involved in data, and that's what I do. When I'm not inside of data, I'm inside of data in the healthcare world. That's out there trying to solve the healthcare crisis. Tiffany will, if we have a question asking if we can email the instructions to buy the course. I mean, how does that work with NinjaTrader? Do you guys send out a blast or how does that work?
Everybody will receive a recording of today. However, I will not be able to send that link out to them. I would suggest them reaching out to your contact page,
okay,
or through your
perfect.
link.
Yeah, you can email me personally and I'll make sure that you get everything that you need.
And if for some reason someone is unable to reach you, they can contact vendor support at NinjaTrader and I can provide information or have you contact them. Okay.
Yeah, Stan, so here's what I probably should have put more detail in on the tool, but again, like I said, dude, I'm not necessarily the best marketer there is out there. So feel free to laugh at my attempt, but here's what the tool does. So you can apply the trend and you can select any time frame you want that trend to appear on the chart that you're trading. So let's say you're trading a daily chart. That is my personal preference for charts to trade. And then I like using the weekly for my direction. So I will apply the trend indicator twice. One time I'm going to keep it on my daily chart. So I'm going to have a bar at the bottom that's just red, yellow, green. Well, you can choose the colors. I should use green, white for neutral, and red for bearish. So there'll just be a little bar at the bottom that would give me my daily trend. And then I'd have a second application. So I'd have a second little bar at the bottom that would give me my weekly trend. So I can see both the trend on the weekly and the daily. Now in the course, I teach you how to do that. Okay, I teach you how to determine the trend, but it's nice to have the computer do it for you. And then the overlap indicator, it's freaking slick, man. I go into great detail in the course on it, but basically here, I'll just give me 1 second here. All right, so take a look at the chart. Can everybody still see my screen, I assume? Yeah, okay. So you see how, remember I've talked about this during the presentation, how this is one of my favorite patterns. And the reason I like this personally is because it tells me that the market is stair-stepping in a direction. So I've got a zone, and then shortly thereafter, I get another zone. You see how, it's my hotkey here. I think it's F6, yeah, okay. You see how this portion overlaps? Now you kind of understand the term, right? Overlap. It's here, right? So you can do this on any time frame. So if I wanted to see a weekly overlap with the daily, that's what I would see here. I could switch that up and I could see only that. It's pretty sweet, man. It's not what I wanted. Anyway, does that help answer your question? And then as far as the trend, I mean, I'll just show you real quickly what it looks like. So again, let's say that I want a daily. So I would just apply this, and I have all my settings that I can use. Here are my colors, and then I'm going to apply it twice. And this time I'm going to use a different time frame. So I'm going to use a week, and then hit apply, and then here we go. So then what you do is you just make this little, so it doesn't take up much room. You can make it even smaller if you want. You get the idea, right? So what this is telling me is I have market structure zones. I've got bullish weekly, bullish daily, and we're ready to rock and roll. No, I don't post. Look, Gene, this is not what I'm offering today is not a standalone system, okay? Again, what I'm trying to offer today is an idea, okay? An idea that I've proven out with data. Okay, I am a data junkie. Like you guys would be blown away by the stuff that Alex can do. Alex is he's truly our wizard behind the curtains. We can run a test that literally takes hours across the entire S&P 500. And it gives us tens of thousands of trades, guys, tens of thousands. We've done this even on 5-minute charts on the S&P 500 to look at day trading. And it gave us hundreds of thousands of trades. Okay, so I can analyze all these different features. Like I can literally analyze the percent penetration of the zone. So have I only penetrated the top, say 20% of the zone? And if so, what's my reward to risk if I only penetrate that top 20? What if I come down to here, right? And I pierce that bottom, but the zone's not broken, right? But I have pierced it. Well, now I'm at the bottom percentile of the zone. What is that reward to risk? I go crazy with this crap. And I love it. And so I've proven with numbers that market structure is the backbone. It's foundational. So the question from there is, knowing that, wouldn't it make sense just to take other things and stack it on top? So you can take your own knowledge, any systems that you guys trade. I don't know. There's a million systems out there. You can take them and you would know when price is in one of these zones. What if you were to go down to, I saw someone mention a tick chart. What if you went down to a tick chart? You knew you're in a zone here, you could zoom in, right? This is a 50,000 foot view. What if you zoom into a 500 foot view and go down to a 5-minute chart? What do the bars look like? Because what in your head, at least what makes sense to me, I'm in a zone. I don't know if it's going to work out or not, but I have data that tells me through testing that I have a specific reward to risk using these daily bars. So if I could find a precision entry point on a lower time frame chart, would that give me an edge? I don't know. The answer is I don't know. But it might be worth figuring it out. And that's part of this whole community thing, right? Because what I have learned through I've been doing this for, I've had students for 5 years. What I've learned in this 5-year period is there's a lot of smart people out there and you guys have a lot of great ideas. I'm not a know-it-all and I will never pretend to be. I've been humbled by the markets more times than I can count. But everybody comes with ideas, and frankly, and I hesitate saying this, but if someone had an idea and I vetted the idea personally, and I was like, okay, this makes some sense. Like I can understand the dynamics behind it. Well, and Alex would have to be okay with it because it's his time, but code it up and test it and say, hey, you know what? Here's what that looks like over 20 years. You know what? Your strategy, your idea has an edge, or no, it doesn't. Right? Like that's what I envision, right? I just envision this massive community of people that have each other's backs and we all are looking at the same thing, market structure, objectively, because that's the key here. If I don't have this, I can't do my testing. And yeah, as far as back testing, Christopher, I didn't mention it today, so I didn't want to get into it, but we've got a cool tool. It's called the Backtest Assist, and I actually have done a test. I manually tested an entire stock where I plugged everything into a spreadsheet, every trade, all the filters, everything. And I did that, I think it was over like 17 years of data. It took me an hour and a half, okay? An hour and 35 minutes. And I recorded, it's actually inside the training, that if you guys buy the training, you'll see it. And then I took the Backtest Assist and I went through the exact same stock, exact same period. And it took me 20 minutes. And I recorded that too. So point is, I can do it 4.5 times faster. So if you think about, I used to actually, I would sit there and manually backtest. Like anytime I had free time, I would do it. It was so brutal because I just didn't have a tool available that had the different features that I needed for my testing and all the data that I like to collect. And so it would take me months to test a system. And then when I finally had the Backtest Assist built, all you do is click on the chart and it logs everything into a CSV file. And then I built a spreadsheet that I just copy paste the CSV file into, and it spits out the information. So it saved me tons of time. Actually, it is, Stan. Oh, I already thought about that, man. Here, check it out. So we've got period 1. You check this little box, period 2. So you've got your trading time frame, high time frame 1, high time frame 2. So there's your three time frames. I can't do more than 3. That's all I got. I had the same thought you did, man. Any other questions? Did I miss anybody's? I'm sorry. I know sometimes people get irritated in these kind of things. If I missed them, it wasn't intentional. We can blame it on Taylor. Oh, so this is bottom dollar, Albert. Man, I made this super cheap. Honestly, I did. I can't go cheaper than what I have out here just because it's man, I have so much time invested in this. So just for attending today, you're getting this for free, right? And $37 a month. I would anticipate that price going up. I think it's a steal personally, but of course I probably am a little bit biased. The pro features. So I have it in the course. Maybe it would make sense to pull that out and post it to YouTube. Yeah, Steve, send me an email, please. Here. Look, I can show you right now. I don't have any problem. This stuff, again, I have nothing to hide here, man. I'm all about transparency. So very simple. We have a daily chart. And I am going to actually, this would be really fun. So let's just overlap it actually with another daily. So what you're going to see is you're only going to see these parts of the zone. These parts, is that proper English? It's got a calculator here. I've got a lot of data loaded on here. The 2 histograms at the bottom, so the bottom one is, I don't know if you can see that, the print's pretty small, but it's a weekly trend. And then the top one, it says minute, but it's actually 1,440 minute, which is a daily. So you've got your weekly trend and your daily trend. All right, this normally doesn't take this long to load up. And I don't want to go too far into the weeds here because we could spend a lot of time on this. Hey, Taylor, you post my email in here, please. I promise it normally doesn't take this long. So let's just go take a look here. So, all right. So here's what you would see. Oh, that's because I loaded the wrong one. This one gives the zone counts. All right. So this is what you would see. You would just see, and this is when the zone confirms. Okay. So the zone starts printing once it confirms, but you would just see the areas where you have like the overlap. Okay. And this isn't ready today, but we do have a way that you can actually get email alerts on it. So that's how it works. And then yeah, so this red here, this red indicates that the daily is in a bear trend, but my weekly is still bullish. So this is the most recent action. I think this is actually today. This is today's bar. So you can see, and this is what I love about the two time frames, because 216, which is the high price here, down to what 196. It's not quite a 10% move, but it's pretty close to a 10% move. Might freak some people out, but look, if you're trading market structure, you're like, heck yeah, man, we're ready to rock and roll here, right? And this is where you would take whatever knowledge it is you have and toss it on top, because you're in a zone. In fact, you've got a lot of strong structure in this area. And you can see, I mean, if you're trading weekly options or monthly options, I mean, that's a hell of a move. I mean, what is that? Straight up over 10%. Yeah, it's built on NinjaTrader.
Hey, Mark, let's go ahead and wrap it up. I'll give you until 10 after, so 4 minutes.
Works for me. Okay, any last minute questions? Oh, thank you very much. I appreciate that feedback. Thanks for your time. It works on any time frame. So it waits for the bar to close. I see what you're asking. It waits for the bar to close and then it calculates. Because we're talking about higher lows and higher highs, right? So the algorithm has to wait for the bar close to start analyzing how it fits into the market structure. Oh, thanks, Asif. I know I'm going to butcher your name, but thank you very much. You can use the indicator anytime you want. Okay, actually, that's a good question. I don't have any automation set up in the back to where when you actually just go by, it's going to automatically email you a download link. I'm going to have to go in and manually put your email in and send it out to you. Well, my server will send it out to you. So give me a little bit of time, please. Like it's not something that you're going to get in and we'll be rocking and rolling immediately. Hey, Lax, what's up, man? I mentioned you today, buddy. Yeah, so if you purchase, we'll get pinged with an email. I'll get your email put into the server, and then it'll send you a link, and you'll be up and going. Yes, that's exactly what Taylor said. So you click the link that Taylor popped in here, and then you just go fill out the form at the bottom to click for the free zones. And again, I'll get pinged with an email and I'll send you the free version.
Hey, I just want to chime in here before we wrap up. Hey guys, this is Taylor. I just want to note this is our first launch. I mean, we're coming to all you guys, live for the first time. So if you experience any problems with checkout or getting downloads or emails or anything, please let us know immediately and we'll get it taken care of. It's just, until we go live with these things, it's hard to know if we've worked out the bugs. So we'll be as responsive as we can, and we'll certainly get your orders and purchases turned around within less than 24 hours. But if for any reason you just experience any problems, please just let us know and we'll do whatever we can.
Yep. Thanks for saying that, Taylor. And Stan, no, I will not need your machine ID. My server creates its own unique ID. It sends you a unique link. It's an executable file. You will shut down your Ninja, click the executable file, and when you load your Ninja again, it's on there.
There's also, so you'll receive an email with instructions, and you'll just make sure to read all the emails you get, because some of them will have links to installation instructions. So the basic zones, the free version, we do have a playlist on YouTube in which it walks you through what they are, how to use them, how to install a Ninja. So you're all good to go.
Yeah, and speaking
Again,
of YouTube,
you can
I'm
always
not
just
real
email
active.
Mark at Trade by the Numbers.
And speaking of YouTube, guys, I'm not real active on there. I honestly couldn't even tell you the last time that I posted a video on YouTube. I plan on getting more active. I've got some really cool ideas that we are finishing up, that my plan is to start posting actual trades and calls on YouTube where you guys can just follow them. Okay. Again, it's one of those things where I view it like this. We all know that this is a very challenging thing to do. Okay. I have found a method that works very well for me. And I believe it's a method that works well for others. And using these longer term charts, it's, if I can, automate some of these processes, then it wouldn't be hard for people to follow. Website shouldn't be empty. If it is, then we got some work to do. All right. Well, I really appreciate everybody coming today, and thanks for your time. I look forward to doing some more things with Ninja. I've been using Ninja since 2010. So it's been a long time.
Awesome. Thank you, Mark, for taking the time to share with us today. If you enjoyed today's session, we hope you'll join us for regular future webinars. We'd like to remind you that the information provided in this was of Trade by the Numbers and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem. And again, thank you so much, Mark and Taylor.
Thank you, Tiffany. Thanks for having us.